Okay, so for this chapter, we've done convertibles 转换权. Also, last week we mentioned share warrants 认股权证. So for share warrants 认股权证 on your slide 111, we've mentioned three major reasons why we have share warrants, right? First reason is what? More attractive. When you want to sell bonds, sell preference shares, you want to make your financial products more attractive. So make investors, they are more interested in buying your financial products. That's the first reason your company decide to sell bonds, preference shares with share warrants. 认股权证 give investors more options. Okay, so that's the first reason. What's the second reason? Preemptive right, 认股权证 in order to protect existing shareholders. So your company issue share warrants, okay, as evidence. What kind of evidence? Evidence of preemptive right. Make sure existing shareholders, they have the option, the right to buy your company's new shares first. Okay? What's the third reason? Compensation. Employees compensation. You give it to your employees as the benefit. Okay? So three reasons. Last week, we've done the first two reasons. So for the first one, you sold share warrants with bonds with preference shares. Okay, so based on first reason, how we deal with the first case, first reason, you can go to slide 113. Okay, just remind you again, 113. If we issue share warrants with preference shares, remember equity plus equity. In accounting, do we need to separate these two equity? No, we don't need to. So when we issue share warrants with preference shares, equity plus equity, you don't need to separate these two equities. You don't need to. Okay, you just combine, use the total amount to record the transaction. But don't forget, when we issue share warrants with bond, every time when we talk about equity plus liability, because these two, they are not the same. So for the first convertibles 转换权, also for the second here share warrants 认股权证, when we combine equity with liabilities, remember we should separate them, right? Record them separately. So we should use which method? With and without method, okay? To find out how much for your equity, how much for your bonds, okay? So that's how we deal with equity with the bonds. So if you go to your slide 115, remember with and without methods, based on the total price, find out how much for your bonds, the others for equities. The equities could be convertibles, 转换权 could be share warrants, 认股权证. Okay, so after we find out the amount for each one, then you could record the transactions using journal entry, right? Okay. Then how about, so this is the journal entry we use to record how much for your bonds, how much for your equity, with using with and without method. After that, on first day, what's the following periods we should do? Remember that on your slide 118. Bond and share warrant, they are separate. They are independent. So we don't need to combine these two together, right? So for your bond, what should we do? Do your routine jobs. So what's your routine job? Discount amortizations. Trying to find out your bond's book value each period. So that's for your bond, okay? How about your share warrant? Equities, remember, no matter we talk about convertibles 转换权 or we talk about share warrants 认股权证, when you find out the amount at the first day issue date. Following periods, no matter the market price increase or decrease, none of your business, right? All on investors. So you don't need to do anything for equity. Okay? But you have to consider because share warrants we give investors the right? So they have the right options to become your shareholders, right? So you have to consider two situations. First is what? Exercise. Whether investors decide to exercise the right. If they decide to exercise the right, they become your shareholders, okay? Another situation is investor decide to give up the right? So they give up the right. They don't want to become your shareholders. Okay? So the following periods, the only thing you have to consider is whether they exercise or give up the right. Okay? So that's the first reason why your company issue share warrants. So all the things you have to consider for the first reason. So what's the second reason? On your slide 124, remember, second reason is for your existing shareholders. We want to protect them, right? So we give them what? Preemptive right, 认股权证，优先认股权 preemptive right, 优先认股权. So we use share warrant as the evidence to prove they right only. Okay, so your share warrant, we give it to existing shareholders as evidence. That's it. So it's not transactions because shareholders have not decided to buy your company share or not. So your company didn't get anything, right? So for the second reason, nothing happened. It's not transaction. It's only you print out share warrant as evidence. That's it. So do you need to do anything? You don't need to, okay? So for second reason, you don't need to do anything. Any questions? So this is two major reasons we mentioned from last week. Okay? So the third reason is what? Share compensations. 股票奖酬. So we give our employees compensation. Okay, so we want to make our employees work harder, so we give them some benefits, bonus. But the benefit bonus, the compensation is share based, means what? Share related, so it's about the shares. Okay, so that's a third reason we give our employees share warrants as compensation. So please go to 143. Okay. So for share compensation, 员工奖酬，员工股票奖酬. So the compensation about shares. Actually, our company had three major share compensations. Okay. We give our employees compensations. About shares, we have three cases, three ways. First is share option plans, 股票选择权. Share option plan actually is share warrant. So you give your employees share warrant. So this is the first. Okay. So the first is we give our employees the right, the option. So your employees in the future could pay additional money to buy your company's shares. Okay, so that's the first compensation we have. Second is restricted shares, 限制型股票. So restricted shares, actually, we give our employees shares with some restrictions. You give your employees shares, but with some restrictions. 给了股票，但是有一些限制。Okay, so there's a second major share compensations we have. So the first two is quite common. So right now, for most of companies, actually they use these two ways to as the share compensations. So the first two is the most common way the company have. Okay. The third one also is about share compensation, but it's not that common. It's less common. Is share appreciation rights. Okay. So the third one is based on the difference between share price. So your employees will get the difference between share price. So that's why it's what 股票增值权增值 so appreciation. So means what? It's about employees will get. Okay. So for example, if your company share price from 7 to 10, so means what? Employees will get $3. Okay. So for the third way, also is about shares, but we didn't really give the shares to employees. We give them the difference between share price, so they also can get the benefit from the shares. Okay, but first two is most common way we have. Okay, but the third one is about employees discount. So actually, also some part of compensation, but it's not what we talk about the first. It's not like what we talk about for the others. Okay, but no matter which one, remember last week we mentioned three very important dates we have for share compensation. So what are these three important days we have when we talk about share compensations? Remember that? It's on your slide 148. Okay, three important days we have when we talk about share compensation. 员工股票奖酬计划。First is grant date 给予。So remember, what does that mean? Grant date. Grant date is the date we told our employees we will give you the right, the options. Okay, so this is the date we grant, we give our employees the right. Okay, then what's the second date? Vesting date. 记得日。So what does it mean? Vesting date, 记得日. The date employees really earn the right, nothing for free. Even though our company told our employees, okay, I'm going to give you a right, I will give you a right, but nothing for free, right? So employees have to meet some requirement. Okay, so what are these requirements? Usually, requirement happened during the period, vesting period, 记得期间. So vesting periods means employees have to meet this requirement during this period. That's vesting period. Okay, after employees meet the requirement during these periods, then they really earn the right. So this is the date. Employees earn the right. They could decide how to use the right. Okay, so before vesting date, they didn't really earn the right, so they cannot do whatever they want. They cannot, even though your company offer the right. Okay, so vesting date is the date they really earn the right. So what's the third? Expire date, last date. Your employees have to decide whether they want to exercise the right or they want to give up the right. Okay, so this is the third date, expire date. Is that expired date is the last date. They have to decide whether they want to use the right or they want to give up the right. Okay, so no matter which share compensations we give to employees, no matter what, we have the three important dates: grant date, vesting date, expire date. And remember, grant date is the date we grant offer the right to employees, right? Also, on this date, nothing for free. So you have to determine, you offer the right to employees. What's your cost, right? So this is the date you had to determine cost of compensation. So what's your expense? Offer the right to employees. So you had to determine your cost of compensation. So what is the total expenses your company have, right? In order to ask employees meet some requirement. You want to give them the right. So how much? What's the cost? What's the expense for the right? Okay. So how to determine it? Remember which method we use? Fair value method, right? We use fair value method to determine the cost of compensation. Fair value, which fair value? We talk about fair value. Whose fair value? The shares or the right? The right, right? We give our employees the right. So we have to know for the right, how much for the right. So fair value method means the fair value of the option. One option. Option means the right, right? So means the share option, means the share warrant. So we give them one option, we give them one right, we give them one share warrant. How much? Okay, but remember, one right, you have to determine how many rights you give them to employees, right? So times what? Unit. Means how many options, how many rights you give it to employees, right? Okay, so this is how we determine total cost of compensations. But remember, one option's fair value, how to determine, how to find out one option's fair value? Using option pricing model, right? But don't worry, this not accounting job, this finance job. So using option pricing model. Okay. Finally, we find out the total cost of compensation. But remember, who make you have this kind of cost? What kind of reasons make your company incur cost of compensation? The reason is vesting period, right? Because vesting period, during this period, you ask employees do something. So because of this, you promise them, give them the right, right? So the reason the cost is from vesting period. You have some requirement for employees. That's why after they meet these requirements, they will earn the right? So any cost of compensation incurred because of vesting period. That's why when we want to find out who has to take the responsibility, vesting period. So we have to allocate the amount into this period because vesting period is the reason may your company incur the cost. So vesting periods have to take the responsibility. Means what? We have to recall all the costs, all the expenses during this period. So that's a reason we allocate cost of compensation into vesting period. So we allocate into each period because that's the reason cost happened. So did you find out accounting? Our logic is quite simple. Who is the reason? Who has to take the responsibility? Then they have to recall the all expenses. Okay. So vesting periods is the reason. So vesting period have to take the responsibility. That's why we allocate the cost into this period. Okay. Then finally, if employees meet all requirement, they earn the right? So how about the following periods? Since the option belong to employees. So later on, whether they want to exercise or they want to give up the right depends on employees, right? So none of your business. So later on, all decisions on employees. Okay, so they could think about two cases, right? Whether they want to exercise, 执行, or whether they want to give up the right. So that's on employees, none of your business. Okay, okay. So that's the basic concept we have for all share compensations. Remember, when we talk about share warrants, share options, 认股权证、股票选择权, or we talk about second share compensation, restricted shares, shares with restrictions, 限制型股票. No matter we talk about either one, based on the structure concept. Okay. So let's look at the case. Share options, share warrants. Today, your company decide to give your employees share options. Okay. 股票选择权 share warrant. So what happened? On November 1st, your company decided to give your 5 employees, 5 managers, what? Option. So you decide to give the option, okay? So the options actually, they give the option to buy 2,000 shares each. So usually one option for one share. One option means you could buy one share. So here told you each means they employees, 5 employees, 5 managers, each you give them the right to buy 2,000 shares. So what does it mean? You give them 2,000 options. Okay? So you give them 2,000 options for each employees. So 2,000 options for each. Manager. Okay? And don't forget, you have to find out the grant date, vesting date, expire date, right? The company grant the options on January 1st, 2022. So this is your grant date. Because this date, your company grant gave the right to employees. So this is your grant date. Managers may exercise the options anytime within next 10 years. So when is the expire date? 10 years, right? So 10 years, which date is your expire date? After 10 years, right? So it should be January 1st, 2032 should be your expire date. Okay? Option price, exercise price, 执行价格. Remember, what does it mean? Option price, exercise price, 执行价格 is the money employees have to pay, right? Additional payment. They have to pay how much? $6,000 to buy one share, right? So you give them the right to use $6,000 to buy one share. So exercise price is $6,000 means what? Employees have to pay $6,000 to buy one share. Okay? And don't forget, we had to find out cost of compensation, right? your company decide to give employees these options, nothing for free. So what's the cost for your company? Here told you, yeah, we use fair value method, right, to determine cost of compensation for one unit. Using option pricing model, you could find out the fair value for one option. But anyway, usually this number we will give you because how to get the number, this finance job, not accounting job. So here told you total compensation expense should be $22 million. Okay, so this is the cost for the total options you give it to employees. Okay, so it's a total cost for the options. Share options also is a total cost for employee service. During vesting period, maybe it's better. During vesting period. In order to ask employees do something for your companies, you have some cost expenses incur. Okay, so far any other information we need but not here, we still miss some information. So what's that? Vesting day, vesting period, right? So what's the vesting day, vesting period? Here told you, next slide told you, assume expected period of benefit is 2 years. So that 2 years for vesting, for period of vest benefit, period of benefit. So sorry, your company want to get some benefit from employees. Okay, so usually here told you 2 years. So that 2 years is what? Your vesting period, service period for 2 years. So 2 years from which day to which day? Don't forget, from grant date for 2 years. So that's why you should know which is your grant date. So from grant date, 2 years more. So this is your grant date. So on grant date, you told your employees, give me 2 years. So stay at my company 2 years. So you told them the requirement on grant date, 2 years more. So will be December 31st, 2023. Okay. So vesting date should be this December 31st, 2023. This is your vesting date. Vesting date. So after vesting date, employees really earn the right? Okay. So since they got the right, earn the right after vesting date, so all decisions on employees, right? So they have case one, they want to exercise it, or they have case two, they decide to give up the right. Okay, so that's case one, case two. So you will find out here told you 20% of options they decide to exercise it. 80% they decide to give up the right. So this is case one. They want to exercise the right. Case two, they give up the right. Okay, so this is the all informations we got. No problem. Okay, so I use the time diagram is easier to you to understand. So grant date on this date, your company given 2,000 options for each manager. So totally 5 managers, right? So total you promise to give 10,000 options. For that 10,000 options, how much? $22 million. Okay, and the exercise price $6,000 means what? Employees have to pay $6,000 to buy one share in the future. Okay, then vesting period 2 years, right? So 2 years. So which is your vesting date? December 31st, 2023. So this is the date employees earn the right. Okay, then after vesting days, all on employees, right? So you find out 20% they want to exercise it, 80% they decide to give up the right. Okay, so based on this is all information we got. Then on grant date, do we need to accounting? So right now, back to accounting. On grant date, do we need to recall anything for the things happen on grant date? Do we need to? Accounting, we only recall transactions, 交易. So what does it mean, transactions, 交易? They will affect your company's financial situations, may your cash flows changes, or may your asset, liability, equity, revenue, expenses, dividends, any item of your financial situation changed. This transaction. Otherwise, we don't recall it. So on this date, grant date, you told your employees, I'm going to give you the options, but only if you meet my requirement. So is transaction or not? It's not. So you don't need to recall anything. So no journal entry. You don't need to recall anything because it's not transaction. You just tell your employees, please stay at my company 2 years more. Then I will give you, you will really earn the right? So on grant date, they didn't get anything. You didn't get anything, right? So your company then means your company. Your company didn't really issue the shares, right? So no, you didn't give your employees the shares, okay? Because they didn't really earn the shares. Also, they didn't earn the rights. Okay. Also, you didn't get anything, right? You didn't get any cash from employees. Okay. So it's not a transaction. Since it's not a transaction, you don't need to record anything. But you could make a memo, right? To record the things on the footnote, but not on full financial statements. Only transactions will be reported on full financial statements. Others, you could make it on memo footnote. Okay, so first date, grand date, we don't need to record anything. But what else? Remember, don't forget, even though you don't need to record anything, but you still have cost of compensation incurred happen, right? Because of what? Because of vesting period. But don't forget, you had to allocate $22 million into vesting period, right? So in this case, vesting period, how long? 2 years. So that's why we had to allocate 22 millions into 2 years. So each year have to take the responsibility. How much? $11 million. So each year have to take responsibility, $11 million. Okay. So for $11 million each year, they will make, you ask the employees do something. So they will make your expenses incurred. Also, share options, the equity, the right incur, right? Because they work for you 1 year. So they got the right 1 year. Okay? They work for you. So your company's expenses incurred. So since they worked, right? So they can get the right for 1 year. So that's why your equity share option increase. Increase means employees got the right, which made your equity increase. So you have to recall share option increase because employees work for you, so they got the right for 1 year. Okay? Any questions? So the expenses about compensation. So we use compensation expense. So compensation expense, $11 million for 1 year. Also, did you find out for the right, for the equity part, we always use share premium, but Dash will tell you for what kind of case. So share premium dash conversions for convertibles. Share premium dash share warrants for the transactions we sell it to the market. So share premium dash share options means that's for compensations. Okay? So each year you have to allocate $11 million, right? So please go to your notes on page 35. Page 35. Talk about the grant date, also the vesting date. Okay, so this is how we allocate the share compensation into vesting periods. So, any questions? If you don't have any questions, then we take a break. Later on, the beauty okay, will take a video for how long? 50 minutes for EMI program. So actually, should have some professor sitting in our class, watch how we teach English, but they don't want to come here. So they want to take a video and look at the video at home. So maybe we will have a 50 minutes, but don't worry, it's okay. So take it easy. Okay, take a break.